and welcome to the LA Venture Podcast. This is Minnie Ingersoll, host of the podcast and partner at TenOneTen. TenOneTen is a seed stage fund here in LA. All opinions expressed on this show by me and my guests are solely our own. Vik Sasi is a partner at Dreamers VC, a $55 million fund co-founded by Will Smith, the actor, and Keisuke Honda, the soccer star. Dreamers does not lead rounds, but instead co-invest with top-tier funds into innovative companies. Vik, thanks for coming on the show.
Thanks for having me, Minnie.
Great. Well, I am excited to learn more about Dreamers. And maybe I could start by just asking you, how did Will Smith and Keisuke Honda come together? How did this all get started?
Yeah, so the genesis of the fund is pretty interesting. Each of the folks that ran their both sides family office, so a gentleman named Ko, who ran Will's family office, there's a whole Smith family office, I should say, and a fellow named Tashi, who ran Keisuke's family office. They had been friends for a while. Will's family office has been doing venture investing for over a decade now. They're no strangers to, anywhere from seed to Series B investments. And Will, clearly serves as a honeypot for deal flow. And Keisuke, he was basically the David Beckham of Japan. He was this heartthrob for years, one of the highest World Cup scorers, et cetera. And he's friends with a lot of these CEOs of big corporations over there. And they, would always tell him, we know that you have a pretty active angel fund. You're always you're fairly well connected in the Valley. Is there any way that we can get access to the best and brightest that's coming out? And so they said, look, this could actually be a pretty beautiful marriage in terms of top tier deal flow with the Japanese corporate capital. And so, maybe Dreamers can serve as this bridge for bringing corporate innovation to corporates domiciled in Japan. And so we finally got it up and running and launched the fund in November of 2018.
Great. And how does a startup best take advantage of this? I imagine Will Smith doesn't just spontaneously endorse every product that comes his way.
Yeah. Our biggest value props, I would say, is, one, the Smith family has north of 150 million unique followers, and they can also help reach a lot of underrepresented demographics that don't necessarily respond as well to traditional channels that startups are using to advertise.
Do the startups often think that, do they hope that Will Smith will be posting about their product?
Yeah, it really depends. So number one is we don't promise anything. We have to be very, cognizant of the fact that, look, we can't promise someone else's time or energy or force him to like a product. And what we really try and do is we say, look, the Smith family has a whole media empire called Westbrook, where they're building a TV studio, movies, and they're doing separate products outside of the family. And they're incredibly talented. Sometimes when people come to us and they're like, okay, well, we really want Will to do this Fresh Prince thing. And it's look, let's just see what the creatives around him, have an idea, because for the folks around him, their number one concern is brand dilution. And what we try and do as Dreamers is just put the founders in the same room as the creatives and let them sort of come to, align on a messaging and strategy and what makes sense. And so, when it comes to sort of having an influencer or celebrity, endorse a product, there's sort of two major components that go into that. There's the talent fee, which can be absolutely immense. And likely if you were sitting on the board of a startup and they're like, okay, we're going to pay this. And it's you probably shouldn't use, a tenth of what you raised on, one Instagram spot. So that's the talent fee, which we will comp in most cases as Dreamers. The other part is a production fee. And that is generally something that, we're not trying to do a disservice to our own business. And that production fee can sometimes be in the hundreds of thousands of dollars, even for a 30-second spot. So, I would just say that is usually the production fee has to sort of stay, but the talent fee we can work around since, we're going to be on your cap table. But I will say is that it's going to be very hard to get a lot of these things in writing or, sort of agreed upon at the contract level before your round closes. So you'll likely, as the founder, have to agree in principle. The other thing that I would kind of say is that in the back of your mind, or in the back of the founder's mind, is they should always have this sort of ratio of what is this investor's likely value add to check size. Because at the end of the day, most influencer funds, they're not leading deals. They're openly saying, look, we probably shouldn't be your first call at 2 a.m. when your VP of engineering quits. So, just keep that in mind. That's why you have a Series A board director that's taking 20% of your company. We're taking, 0.2% of your company. The other thing I'll say before I wrap is, understand when you are talking to an influencer's fund, who is going to be your point of contact there and what their incentives are. So if it's someone from the family office, let's just say the chief investment officer of whomever, they're likely going to be compensated based off of the financial performance. So they're going to be very heavily invested in making sure that price per share, whatever they get in, or whether it's a warrant or whatever, that your company continues to appreciate. But if it's the business manager or an agent that introduced the opportunity, they may not see anything, even if your company does really well. So that may inhibit how much they push the talent to get involved with your company when they don't really see a dime, no matter what happens. And then finally, you need to remember that the talent and celebrities and influencers, they're not professional VCs. They're artists or they're athletes. And this is something that they principally do on the side. So no matter what happens with what you've agreed upon now or down the line, if they don't have a natural affection to your product or vision, they may opt out of promoting it down the line. So word to the wise, I guess, when you're thinking about taking a check from an influencer.
Interesting. And also, is some of this like hard to get in writing because are your deals going extremely quickly because you're not leading around? So the person already has a term sheet, or how does that come together?
Yeah, absolutely. You hit the nail on the head. So prior to Dreamers launching, Will's family office is an LP in Andreessen's Cultural Leadership Fund. And so they tend to send us several co-investment opportunities, nearly all of which we hit because Andreessen is obviously, their name precedes themselves. But overall, these are, really promising companies that otherwise we wouldn't have seen. So when it comes to, there's a gentleman named Chris Lyons who runs the fund. So he'll make an intro and we'll get this and they'll say, hey, we're investing in this company. It's usually one of the lead consumer GPs over there, Andrew Chen or Connie Chan. And they're like, okay, they're closing 2 weeks from last Friday. And so it's like, look, the first closing is done. The company's like, look, we already have 85% of the round in our bank. You're a nice to have, you're not a need to have, obviously. So we'll run a super condensed diligence process and then wire by next Friday, or else, you're gonna have to save it for the next round.
And how about advice for VCs? Like, do you just have certain VCs you work with, or should VCs who have a product that sort of fits in your purview, should we be sending more deals your way?
Well, I think generally we're always going to say, without a doubt, we can always look at more deals. Look, as pure play co-investors, we have to play nicely with everyone. We have no sharp elbows, and that's actually our whole strategy. So it's basically, it's trying to stay top of mind. There's so many great funds out there. I'm sure we can both agree we're living in a bizarro world right now, and we just try and play nicely with all of them, and keep trying to get allocations wherever we can.
Well, that's useful to know. When you said in this bizarro world, my mind went to 5 different bizarro things. There's so much bizarre stuff. What did you mean by bizarro times we're in?
Yeah, it's true. There are a number of ways I could take this, but here we're at unbelievable amounts where the scuttlebutt I hear of, Tiger Global dropping a blank check into a founder's hand and saying, if you, write whatever you think valuation or term sheet rather, whatever you think is fair. And if we agree, we'll sign it. I've never heard of anything like that. So that to me seems unprecedented.
Well, here's one for me. So I grew up on the Caltech campus and then I studied computer science. And it's weird for me to overlap some with Hollywood now. And so that feels bizarro. And so can you give me the perspective of Hollywood looking at tech? And do you think it's the Hollywood folks see that Tiger Global is dropping hundreds of millions of dollars, or where do you think the overlap is coming from?
People, influencers or something, they're like, oh, Will Smith's venture fund. Okay. Yeah. I want to do this. I want to do that. And as I've come to realize I'm trying not to make these broad sweeping generalizations, but there are a lot of, or several founders that had sold their companies that made off, really, really well, yet, for whatever reason, still couldn't, find a date on Bumble or Hinge or something. And, their IQ, was very much overpowered their EQ, let's just say, yet they were now worth $250 million.
Right.
So all of a sudden they're like, okay, well, I can just, come 250 miles, south, come to Southern California, come to LA. And it's like, wow, I can, go to West Hollywood. I can basically live my dream life that certainly was not capable, up in Pack Heights. So, and it, certainly speaks to the grass being always green on the other side. The other thing is that I found some of these, influencers and celebs who, they'd get a ton of exposure. They're in some of the most popular series. They're on the covers of magazines, yet they'll look at, they'll take a smidgen at Wall Street Journal or something. And they're like, wow, this person is worth 50 to 100 times more than I am. Yet I'm gracing the cover of these amazing magazines with crazy distribution and reach. I'm like a global, I have global visibility, yet I'm making 50 times less. Maybe I should be doing more on the tech side and investing or something. And so I think that's, maybe spawned some of the overlap between Silicon Valley and Hollywood.
I agree with that. So there's just money flowing in the tech startup world. I also think both sides sort of fancy themselves creators. There's all sorts of influencers getting into tech. Do you think that there's good ways for startups to sort of leverage that?
Yeah, no. It's certainly something that I think we'll be reading about maybe in a year or two as to startups that gave a lot of, maybe they invested too much in influencers, and I'm not even saying this is necessarily celebrities. Even there are plenty of influencers that the average someone in Kansas doesn't know, but it has plenty of millions of followers. Let's just say, it's a really good question. I think time we'll have to see. And, generally they use a lot of the same advertising metrics as to how many more eyeballs and impressions, what does the conversion come to? How do we sort of attribute that? Maybe we should just be giving a discount code as opposed to measuring on like a CPM or eyeballs. The other thing that I'll say that's really happening now is like the innovation financing. So, Mr. Beast and Night Media, and I think even Slow Ventures, Sam Lesson, they're actually look, we actually want to take like equity stakes, a synthetic approach into some of these emerging creators. And I think that is actually going to be a really important innovation. And that's something that will actually maybe change the game. Of course, this is also investing in them versus using them for your own startup. But I think that's where a lot of the innovation is going in this, newfound sort of creator passion economy.
I'm not totally sure I know what you mean, which is, you said it's a synthetic approach.
Yeah. So I believe, and I think they're still figuring this out. It's almost like some kind of hybrid. And this is also my own understanding, so I could be hilariously wrong about this. But is to basically take like some kind of stake into their future earnings, or some kind of it's one thing like future earnings, or it's like, okay, I'd rather, and there is a Silicon Valley company called Pando Pool, or Pando Pools, which is basically doing this. It's kind of like, it was meant for entrepreneurs or even like young athletes, like in the minor leagues. They would basically all commit, we're going to, commit 10% of our salaries for the next 10 years into this pool, and then we'll split it up after 10 years. And so obviously you're hoping that just one of it, it's like power law and venture, you're just hoping one of them becomes a superstar, and all of a sudden everybody, makes off pretty decently. I think it's a very similar approach for these influencers, only you don't have to, or creators, I should say, except you don't need to be a creator. You can actually be like, what, I know there's someone I'm standing them on TikTok. I know they're going to be huge. Like if there was a way that I could invest in them or invest in their future growth of following, I would. And so very much in the early innings. And again, this probably creates all sorts of weird, sort of conflicts, because actually this same approach was actually banned, I think in Brazil and some other popular soccer countries, because people then took this approach and they were like, okay, well, I'm just going to start funding in 12-year-olds, these like top young stars. And it's like, okay, like this is actually kind of perverse, but I think that's coming, maybe in a more mainstream and an appropriate, approved way.
I couldn't decide whether it sounds like an NFT or like an income share agreement.
I think it's more on the ISA part, but who knows? I mean, it's like, I don't even know what an NFT mixed with an ISA is, but I'm sure we'll see it in YC, this winter or something.
Yeah, raising at 100 million pre-launch. But you keep making this distinction between influencer and content creator. Is a content creator a more pure form or something because they're actually creating something, or what's the distinction you're making?
Yeah, and I think it was the CEO of Patreon that really espoused this view, and who I took this from. And I think the industry kind of looks at creators as more authentic and identifying as artists. And that's something that we think tends to resonate a little more with Gen Z versus influencers, who kind of identify more with just like marketing and sponsored content, and resonates maybe more with millennials if we're splitting it up by demographic. But I think you can tell one from the other based off of, honestly, probably based off of the economics of where their money's coming from.
Is an actor, like Will Smith fundamentally started as an actor. An actor is not really are they a content creator?
Yeah.
Sorry.
No. It's a great question, because now we're introducing all these new terms, and I think he's a content creator. If you look at his social media channels, the things that are a lot more spontaneous, that come on Instagram or Snapchat, TikTok, et cetera. But anything where there's a budget of, $100 million, it's hard to say anybody's a content creator when there are like 10 zeros after the budget.
Okay, so I'm going to go back to investing, but one more question on just celebrity, because it's interesting to me. So do you interact with some of the other influencers? Is Jay-Z's fund, is it Marcy Ventures?
RC Venture Partners. Yeah, so we see a lot of the same folks in similar deals, because generally when people think of Will and his influence, I mean, obviously there are plenty of others, Jay-Z, Serena Williams, Serena Ventures, another great fund we've co-invested with a number of times. Yeah, we see them all the time. And it's funny because we all know sort of what role we play in the venture ecosystem, which is most often than not, and I hope I don't have to like retract this, but I think we all kind of recognize that we're a nice to have, not as much of a need to have on a company's cap table. And I'm not saying because a company is B2B SaaS, so obviously they don't need an influencer, but more of like, look, the top 10 or top 20 venture funds, I mean, they bring a very serious value add. And so like we have the saying, the reason we don't lead deals is because any deal that would take a term sheet from us, we probably shouldn't be investing in, because it means they probably, 100 other funds may have passed, or, maybe they're just not realizing what all is out there. So to answer your question, yeah, no, we know we know a lot of the other celebrity influencer funds. We're always happy to talk to more, especially, and we certainly counsel a few that are thinking about starting like, a venture fund or venture arm. This is a lot more complicated than just, getting free warrants or something for doing a brand deal.
So you've referenced warrants a couple of times. How does that come into play? And do you think it's different? Like at the seed stage, we don't see warrants.
Right. I think warrants are a good tool. I mean, traditionally they've been used as these sweeteners and deals, but I think it's a way to actually hold talent accountable. I think it keeps both sides accountable, I'll say. If you can sort of tie those warrants to, if you want to tranche it out into like different milestones. So like, okay, like I know, we had in principle agreed upon, one Instagram spot or something. So maybe when you are hashing out some of these things, you can say, like, look, like we will, try and aim and get warrants equivalent to this dollar amount, assuming you do it by this date or something. So I think warrants are actually a good tool for startups to use when they are thinking about bringing on an influencer.
That makes sense. Makes sense. Should I move off influencers? Is there anything else interesting there? Like when you guys share your tips, are there any, you're talking to Marcy Venture Partners or anyone else. Do you have any advice for those funds when they're getting going?
Yeah, I think when we are counseling, and Marcy's been around for quite some time, and for a lot of folks that are just getting into venture and are enamored with the sexiness. I mean, they see this Coinbase IPO and whatever, they're like, great, like let's invest in crypto. How can this go wrong? One is trying to understand or help them understand that like venture is largely about power law. Markups are meaningless unless you're like properly secondarying out. I mean, they're sort of just like a general finance education. And then the second is basically saying like, we think that you can generate alpha despite the fact that, there's this glut of capital and, you need to be ownership sensitive and all these things. And fundamentally that's based off of our own sort of thesis, which is that there are alternative models to creating a top quartile fund besides taking your traditional, 15 to 20% ownership and maintaining and defending that through exit. You can, win in venture, but you just need to dedicate resources. You have to understand that you have to be incredibly long-term oriented. 10 years might as well be a millennium when it comes to, someone who's in the zeitgeist now, but, could be a has-been by then.
And how do you think about your portfolio construction in terms of ownership and holding?
Yeah, man, this is something that we think and talk about all day, every day on our group Telegram chats and everything.
How exciting.
So,
how fun for you.
No, it's a really, I never thought, once, you're at the point in your career where you like kind of have the reins and you're like looking at all this ownership and you're doing modeling after modeling. I mean, like I've tried doing Monte Carlo simulations. It's horrifying and embarrassing for so many reasons, but yeah, I think it's the hardest thing. And when I talk to, really like much smarter, much more seasoned investors, such as yourself and others who, have been like informally counseling me, they're like, look, like this is the hardest part. This is like where you put your big person britches on. I mean, we've done 65 deals in the last 2.5 years, anything from, we've done a tiny bit of pre-seed to Series Ds, and valuations anywhere from literally like, 7 million all the way up to, Dapper Labs at 2.6 billion. I have this joke of a column on our portfolio model, which is like exit needed to return the fund. And it's like, okay, well, basically they all need to turn into Coinbase to some extent. And so fundamentally, we think the ceiling on how much we can return is certainly lower than any concentrated seed fund, but hopefully our probability of getting into the carry potentially meaningfully is higher than a concentrated fund, where if you don't have fund returner, then you're almost certainly a bottom quartile fund.
So on investing, you said, you're not a thematic investor, but can you just choose a couple illustrative examples, I guess, of investments you've made?
Yeah, so we're 100% not, we're 100% opportunistic. Let's put it like that. We're not like thesis driven. We're certainly very proud of like some of our more notable investments, Clubhouse, Dapper Labs. But then we also have a couple that people maybe didn't know about that we were in a lot earlier. So one is called Placo, which is formerly known as Game Closure. And this was, it's an interesting story because they raised their first round of financing in 2012. And they did have a who's who. It was Benchmark, Greylock, I think General Catalyst, maybe CRV. But this was like 8 or 9 years ago, and it took them years to develop their product. And they were trying to do in-browser gaming using HTML5 as sort of their first product. And so, there were a lot of hiccups, obviously, in the product development. They raised, a number of different convertible notes along the way at various caps. And finally, I think it was October, November 2020, when they finally turned on monetization. And it was like orders of magnitude higher than any other growth, I think any of us had ever seen. And naturally, they ended up getting a term sheet from Sequoia. And, it just goes to show like they were truly in this like trough of disillusionment. All of their earlier investors were like totally tapped out. And it wasn't something that they lost faith in this a year ago. These are investors from like 8 or 9 years ago. So they turned it around, became a unicorn, just goes to show all of that hard work, all those employees that had stuck around for so long, grinding, it certainly paid off. And then the last thing I'll say, and this is probably this is like the highlight of my life, I would say, is how we ended up consummating our investment in The Boring Company. So one of your other guests, D.A. Wallach, a good friend of mine, we both grew up in Wisconsin, made the intro. And he was like, yeah, like just go to SpaceX headquarters, like Wednesday at like 10 a.m. And like, there's going to be some presentation, just like, get more info. And I was like, okay, cool. So, we walk in and, there's just a few of us, and I'd never met a lot of these people. And there were very few of us, in this room. And all of a sudden we see, they finish a SpaceX board of directors meeting. So, these folks come down. Again, like as seasoned as you get, I have these like venture superstars around, Steve Jurvetson, David Sachs from Kraft, et cetera. And then finally, and I was expecting somebody from the management team from the board and company to come in. Instead, it's Elon, and he's at the front. I mean, literally like any other pitch that you would see presenting to, a partnership or something, at the front, with his little clicker going through these slides. And it was like, I can't believe this is happening. And he was taking questions. I mean, and it was like incredibly, it was like, look, obviously he runs two immense companies and he's still pitching us, and he's still like trying to persuade us as to why this is going to be the future. And for me, it was so jarring because it doesn't matter what level you reach, you're going around hat in hand, you still have to do the pitch. It's part and parcel of co-founding a company.
That's so the chance to kind of hear how his brain works, right?
Yeah. And especially because he was as in the weeds with every aspect. He had a command of everything we were asking, from why it's actually safer to build, whether it's like 100 feet underground or something, like that's actually safer to be in an earthquake than actually on the surface, because you're worried about all these falling buildings and rubble and all these things. The other interesting part was, he knew about all of these laws, how when you own a property, it used to be that the property would extend from the center of the earth all the way until the heavens and the sky. And it wasn't until the National Airspace System, when the FAA was formed, that they were like, okay, actually it can only be like, 500 feet above the ground, then it turns into national airspace. But technically it's still some really deep amount of ground that you can, keep digging into, which is why there's all these eminent domain issues that were coming up. And he was like citing like court cases and all this stuff. And it was like, he's also the CEO of a gigantic public company and this rocket company whose offices we're sitting in. And he's just like, ain't no thing. He's just like, yeah, I also, I know everything. And it was not in an overconfident way. I mean, he still had that, humility of like, this is a huge opportunity. Like, you guys gotta, you got to get behind me. And was like, we're all behind you. Like, you can, do whatever you want. There's a check waiting for you.
I mean, I guess I kind of had the same thing with Will Smith. Like, I guess you've interacted with him. Is he like a normal person? Like, he's sort of so larger than life to me.
So Will he's an absolute force. Certainly had the good fortune of interacting with him. The weird thing I'll say is that because he's been in the limelight for 30 years, having grown up watching him in Fresh Prince, I mean, as a rapper and all these things, like, you feel like you know him intimately, right, when you definitely do not. When he does not know you intimately, you just feel like it's like an old friend, and when it's like not the case at all. But yeah, I mean, his smile, he's incredibly, it's like, if you ever had the chance to like understand why, former presidents get to why they were, or like all these politicians, anybody in huge positions of power, how they just, they make you feel like you're the only person there, or they're just like larger than life presence. He certainly exudes that, to a T.
That's good. I'm glad it's not all just an act.
Yeah, no, definitely not.
Any other advice that you give founders?
One is just run your own race. There's always going to be someone younger and smarter that's raising a new round or just got money from a top tier investor. And there are more reasons than not to feel down about your company's prospects or your own.
I think the grass is always greener all of your thoughts ring true, but you kind of from the outside seem like you have the coolest job. So how did you end up in this job?
There's one thing that I love about venture more so than any other parts of finance, in that they are incredibly forgiving of background. So I spent the first, half of my career, 5 years abroad. I spent about 1.5 years in East and Central Africa, 3.5 years in Haiti, working for the Clinton Foundation, the government down there, working for a failed state. I mean, it was like as far from venture as possible. And then ended up going to business school and somehow found my way into a venture role coming out of school. And then the very same gentleman that introduced us, DA, my close friend from high school, he had known that Will's family office was trying to spin out this fund. They needed somebody to really help, come run it. And now, as you were saying, it's like the coolest job. But like fundamentally, it's like, how do we make the numbers work? The one thesis that I will say we have is, are we going to be able to prove that there are alternative models of becoming a top quartile fund without necessarily taking 15 to 20%? And so is there a different playbook?
Yeah, that's interesting. Vik, it's great to have you on the podcast today. I'm excited for Dreamers VC. It sounds like founders or VCs might be interested in approaching you.
Truthfully, if there was one thing that, if I had a magic wand that I could make go away, is the importance of a warm intro. So we respond to every single email. It's Vik, VIK @dreamers.vc. Please do shoot me a note. Thanks for having me.
Real quick, it would be great if you could spare a moment to give the podcast 5 stars or share with a friend. Or I love getting emails. Send me a note, Minnie @TenOneTen.net. Thanks.